Alright guys, welcome back to my channel. This is the Toast Beans Market Talk for November 15th. I'm Fred, I'm the Chief Market Strategist for Toast Beans, and today I want to briefly go over what's going on with the overall markets and is Friday the local bottom that a lot of people are talking about. I see Tom Lee continuously call for 7,000 S&P 500, and then Dan Ives of CNBC, he keeps talking about we're going to get a year-end rally, but meanwhile the markets keep tanking and tanking and tanking, and a lot of people are just left holding the bag because, and the funny thing is Mark Newton, right? FundStrat's technical analyst, like I feel like he checks his work against Tom Lee because they don't seem to have differing opinions. They just seem to they take different routes to come to the same conclusion. So I'm not sure if he's really like, he has his own set of mind to talk technically, because I feel like the technicals really do paint a different picture than what Tom Lee is saying for S&P 7,000. So of course things can change with Nvidia earnings next week, but today I'm going to go over the cold hard facts, the charts, the technical analysis to see what's really going on underneath the hood and to see if we're really at a local bottom or not. So without further ado, let's get started. So right now we have the picture of the VIX on the weekly time frame. You can see that on the MACD we have a bullish cross. We got that back in October to signal increased volatility in the near future. And this is the first day, I would say, since the October sell-off that we got the VIX closing above the 200 weekly moving average on at around 19.83 or close to 20. So, this is telling me that bad things are about to happen on the S&P 500. You see that every time we close above the 200 on the weekly time frame, we got more volatility in the weeks to come. You see, we got a pop here, we got a pop here, especially with the bullish cross on the MACD signaling, a bullish momentum on the VIX. So I do expect increased volatility going forward. You can see on the daily time frame that this is the first time we closed above the 200 moving average since the October sell-off. And you can see that previously when we got that sell-off, I believe it was like a week ago, where we got that V bottom for Friday and the follow-through on Monday. You can see that we never closed above the 200. This is the first time we did so. And then previously we got a bearish candle pattern here, and you can see that here we pretty much got the same thing, but we still managed to close above the 200. Previously, every time we got a wick on the VIX, we tagged the 200 but never really closed above it. This is the first time we did so, and we're getting a bullish cross on the daily time frame as well on the MACD. So volatility is here to stay, at least in the short term. You can see on the S&P 500, the SPY ETF, the 4-hour time frame. Interestingly enough, you can see that when we got the drop from all-time highs around 690 to around, I believe this was around 670, I want to say 673-ish or 670, we attempted to get a rebound, right? You can see that we got a bullish cross on the MACD, but then we got a divergence here. You can see that we went down again, and then we got a divergence on the on the RSI. So you can see that we already tried to rebound, but we got a deeper sell-off, and the RSI and the MACD formed bullish divergences relative to the price action, and then we got that immediate rebound, the V-shaped rally on Friday, and the follow-through on Monday. But you can see that the V-shaped rebound last Friday resulted in closing above the 200, and this time, and also a cross on the MACD, signaling bullish momentum for real that time, right? And we got the pop. This time, however, you can see that we barely, we didn't get a cross on the MACD. We barely even, we tried to close above the 200 on the 4-hour time frame. We couldn't even do it. We got a few wicks on Friday. We couldn't do it. And that is dangerous because that marks a shift in market character. A lot of people are saying that this is exactly like Friday. We're getting that V bottom. I beg to differ because at that time we opened flat and we got the sell-off, and then we promptly rebounded. This time we tanked. We opened like negative 1%, 1.5% to start the day, and then we tried to rebound, putting the onus on the bulls. The bulls have the proof of burden right now to show that this is a local bottom, but so far they're not really convincing enough. And you can see that the next level of support, really, if we were to break all of this, come down, would be around that 650 level. You can see on the daily time frame for the S&P 500, the market character has really shifted. So previously, we got the sell-off, the MACD turned bearish. We got that nasty looking MACD with that like 2 or 3% sell-off on the S&P 500 back in October, and then immediately we rebounded. We tried to get back and above the moving averages, the 9 and the 20, but we held the 50 pretty well, and then eventually we got that cross on the daily time frame, resulting in a big push. And this time, however, we tried to flip the MACD positive. We couldn't really do it. We got the sell-off. And now we're struggling on the daily, you can see, to push above the 9 EMA and the 20 moving average. You can see that the MACD is pointed down, signaling, continued bearish momentum. You can see that this candle here is a little bit different than last Friday. Last Friday is just a wick down. We got that wick, but the body stayed above the 50. This time, the body went below the 50. We tried to get that rebound. I think the next logical place for the S&P 500 to move would be that 50 or that 100 moving average, which sits around that 650 level and happens to coincide with the October lows. And I think this is the next logical step. Looking at the big picture, this does not look convincing, especially with that MACD coming down here as a local bottom. And you can see on the QQQ 4-hour time frame is even worse. We couldn't even touch the 200 on a closing basis. And you can see previously with the October bottom, we came down, but we immediately tried to rebound off of it, forming support, and we pushed right back off of it, right? This time, with the last Friday bottom, it was a little bit dangerous because we went below the 200, but we promptly, closed above it, saving the market overall. And plus the bullish divergences on the MACD and RSI helped that big push up. But this time, the story is a little bit different. You could see that we went down. We couldn't really get above the 200 this time. That's a change of character. And we're not getting the bullish MACD cross as well. So if I were to put myself on the other side, right, let's say I'm a bull, I would be hoping that we get a big push on Monday and flip the MACD positive as soon as possible, because if not, downside looks more probable at this case. And you can see on the QQQ daily time frame that this looks extremely bearish on the MACD. And you can see we tagged here. Now we're trying to get, now we actually, we wick below it and we try to get a close above it. So, things are not looking good. The daily is still negative. And you can see that Friday's push really tried to test the 9 and the 20 as resistance. And, that's not good at all. Like, that's more of a back test as opposed to like a, holding support, like as what bulls would say. It's more of a back test in a bearish trend. And that's the theory I'm going to stick to right now. And I don't have the IWM chart, but the IWM does not look good at all. We got the cross, the bearish momentum cross on the weekly time frame. We tagged the 50, then and the next logical spot would probably be that 100 or 200 moving average. And you can see that fear and greed is at 22. And we've been in fear for actually quite a while. We've been in fear since like probably October. And a lot of people are pointing to this as a reason to be buying stocks. But if you remember at the April bottom, we actually stayed in fear and greed for a very long time, or at the fear level for a very long time. And then market crashes happen at the extreme fear level. We could probably hit teens or single digits before we get a capitulation bottom. But note that the market could actually go lower, even though we're in extreme fear. So that's not alone a reason to be buying stocks. There's a reason why people are bearish, and some people know things that we don't, especially on the retail side. So there's often a good reason, and not just blindly bearish just because things are so overbought. And this is from Cheddar Flow actually. So you can see that someone asked when were they bought, all within the past 60 to 90 minutes. This was posted on Friday, and this was after we got that big push down in index futures before the market opened. And you can see that the market recovered, and then people started pouncing on puts again. Um, this adds conviction to my thesis that the markets haven't found a local bottom yet. You could see that there's a lot of 640 puts expiring in the next 2 weeks. At the end of November, you can see that we got the 674 puts, 673 puts for 0 DTE, and then we got a bunch of December puts targeting 640. And that leads me to believe that 640 could be a key level of area where we could find a bottom, hopefully. But until I see a lot of these calls coming in for 7,000 or 6,900, I want to err on the side of, there's still probably a little bit more downside to wash out a lot of bulls before we get that rebound. But as of now, it seems like the market direction is to the downside. And a lot of people are pretty hopeful that Nvidia could carry us or carry the tech market higher post earnings. We'll have to see what they report, but so far the Mag 7 hasn't been doing well after they reported earnings. In fact, a lot of these companies, you know, other than Apple or Amazon or Google, probably they moved down after earnings. So, um, yeah, we'll have to see. But a lot of skepticism around the AI trade, and with the VIX again being above 20 or above the 200-day moving average, things aren't looking too great for the overall markets. So we'll play it day by day. But this is pretty much my weekly analysis, and yeah, I think that the market has a change in character. I think that until we see further evidence of bullish price action, we'll have to err on the side of caution here. So hope you guys enjoyed this analysis, and I'll see you guys soon. Peace.